If the rally that's taken stocks to 5-year highs really is at risk, what role will the infighting inside the nation's central bank play? Senior economics reporter Steve Leisman is here with that story. And Steve, it's good to have you back. If the minutes unveiled anything last week, but besides the fact that they spooked the market momentarily, they really showed that there seems to be a battle inside the Fed. How real is it?
Well, what's interesting, Scott, is that there's not one but really two battles. The first battle is the one I think the market expected, which is that there's differing opinions at the Federal Reserve over the pace of improvement in the unemployment rate. Some guys think it's going to happen sooner, other guys later. Some guys have one metric, and of course women are included here too as well, for when the will hit that 7%. With all due respect to Janet Yellen, Senator Pianalto. So what you're looking at right here is the count, is where everybody is in their forecast 2013. You can see a pretty solid majority. 16 of the 19 are at 7.4% or higher. To be sure, the Fed has had this wrong in the last year. They were almost a full percentage point wrong at the beginning of 2011, or the end of 2011 when it came to 2012. The other fight is the one that's more interesting. The minutes note that several members of the Federal Reserve Board are concerned about the balance sheet and the unwind of the balance sheet. This means they're concerned about taking losses on the balance sheet. They're concerned about what happens to the payments the Fed has made to the Treasury each year. Nearly $80 billion the last couple of years, probably going to be around $80 billion this year. So the Fed could take losses. And then the other problem right now, almost a political problem, also an economic one, is that in order to keep those reserves from becoming high-powered inflation and becoming loans, the Fed's going to pay interest on reserves. Depending upon what happens to interest rates, those numbers could be tens of billions of dollars that the Federal Reserve will pay the banks in order to not make loans. You think the Fed has problems now? Wait till that happens.
Well, so what are the traders then supposed to do with that information?
So right now we have to watch very carefully the meeting at the end of this month, but also the statements. What we need to know is who are these folks who are concerned about the balance sheet. If they're one set of characters, the guys who have been in opposition to the Fed all the time, that's not a problem for Bernanke. But if it ends up being the guys who have the centrist guys, maybe members of the Board of Governors and other centrist presidents who have supported Bernanke, then you could have a situation where QE3 could come off sooner than you guys think.
Do you get a sense that it's the centrists that are actually turning?
I have some concern that it could be, that some guys in the middle may have concerns about this balance sheet unwind. And we've got to wait to hear their comments. But it did not appear to be Jim Bullard, who I talked to on Friday. He was saying that he thought we were going to hit 7% unemployment by the end of the year, and that would be a reason to stop QE. So it didn't sound like Bullard would be an early guy to pull it. He's a voter this year. We also need to know what Esther George thinks. She's the new Kansas City Fed president. My suspicion is that she's going to follow in the tradition of Tom Honig, and she's going to oppose a lot of QE. But I don't think, what I don't know is where the Board of Governors, it's very, very unusual, and has been for a while, for members of the Board of Governors to vote against it.
Is it possible that some of the people involved in what we've termed infighting aren't involved in the actual voting on policy? And how does that all factor in? Do we need to take that into consideration?
That's an excellent point, Scott. So the minutes tell us that participants are voters and members is the fuller FOMC. This particular segment of the minutes suggested it was all just members, and we don't know where the participants are. I don't think the Fed chairman wants to move ahead with $85 billion a month of securities purchases with a lot of opposition, either from members or especially participants. I don't think he wants to do this policy. But remember, at $85 billion a month, you're going to increase the balance sheet by $1 trillion.
JB, I mean, are you worried about this sort of thing? I mean, as a trader who's watching the market every day, the market reacted negatively to the release of the Fed minutes at this perception that QE3 would end early. What are you thinking about if you're trying to navigate the market?
Just think about the mindset, the 180 we've all done, where we're now talking about too much stimulus. We were having this conversation 9 months ago. It would be a total different story. So from a trader's perspective, this is the last thing I'm worried about. This is actually fairly bullish to be hearing that they're worried about too much money, too much velocity of money, too much hiring. I'll take that as the bear case.
All right, Steve, it's good to see you as always. Thank you.